Hey traders, this is Blake Morrow with Trader Summit. I have Mr. Richard Matthews with us from Pardus FX. And I want to say congratulations are in order. You've been looking for a stronger dollar. We got a strong jobs report on Friday, and we got some dollar strength. So what do you make of this jobs report, by the way? It was a blowout number.
Wasn't it? It's a real blowout number, 3 times the guesstimates. And I saw 517 come up on Twitter, and I thought, I can't believe this. I had to wait to see it clarified.
Yeah.
There's some anomalies in there. I understand it's been quite a mild winter, so more people can get out, more labourers out working, which helps this time of the year. There seems to be a lot of immigrants coming in, taking jobs at the lower end of the market, but it's still 517. It's a hell of a number, and you combine that with the JOLTS figure, where there's still 1.9 jobs for each individual looking. Still looks pretty good over there. Talk of a soft landing. I don't think we're landing. I think we're going around again, having another look and taking off.
Yeah, that's the big discussion right now. Soft landing, hard landing. Explain to us what you mean by that.
Right. So a soft landing is getting rid of inflation and keeping the economy bubbling, and no recession. Hard landing is getting rid of inflation and hitting into a recession. I think at the moment we've got neither. I think we'll end up with a hard landing. I think that the Fed will force us into a recession. And as I've said before, we've never seen the like of this before in our lifetimes. No one's had a pandemic and seen a pandemic. And I think the job market has relocated. People are working from home. People have moved out of cities, moved to rural communities. A lot of people have taken early retirement. So I think that's screwing with the jobs market. And people say, oh, it's data dependent. Well, what data do you really know? What data can you trust? Jobs-based data, I'm not sure you can, which brings me neatly on to CPI next week.
Well, okay. Well, can you tell us what how Google ads and AI were reflected during the Spanish flu? I mean, if you could do it, I'm joking. Okay.
Yeah, that's it. That's the point, isn't it? We've never we weren't looking at the data. I'm not sure if data exists for, was it 1918? I think it was 1918. And so, we're in a whole new ball game. And anyone that says can read this into one set of figures, I think they're going to be proven wrong. And I think Jay Powell is probably right. He's going to be higher for longer. I think he's bored of reiterating this. He's how many times can he say it to the market? And the market ignores him.
Right. Well, we finally got the dollar strengthening following the jobs report, and it's holding on to gains pretty well. You got the euro trading, well below 107.50, 108. Yeah. It's holding down there. The sterling's getting close to the big figure 120 level. How do you position yourself over the course of the next couple of days ahead of an inflation number that is so important to the market? But you look at equities, they're still, S&P is still above 4,100. We're still holding out pretty well. So how do I interpret this as a trader, and what's the best way for us to position ourselves?
Right. Well, I'm going to put my neck on the line here.
That's what we ask for here at Trader Summit. As traders, we want to know.
I think CPI is out on St. Valentine's Day, and I think you're going to see a St. Valentine's Day massacre.
Oh, God.
I think this number's going to come out worse than expected. It's going to be higher than expected. The Cleveland Fed are quite bearish, and they're looking for a higher number than the market's looking for. I don't think it's going to have changed that much. And I think everyone is anticipating it's going to be a nice gentle drop down to 2%. We're not going to have any hiccups. I think we're going to get a hiccup on Tuesday, and they're going to see all hell break loose. Dollar rally, S&P fall out of bed.
So, this dollar strength that we're seeing, bloody Valentine, my goodness. Yeah. This dollar strength that we're seeing, you think there's going to be a continuation, and we need to be prepared long dollars heading into this.
Yeah, I do. I think you want to be long dollars, not necessarily short euro, but I think you're going to be short of my old friend sterling. I think that we're just bumbling along over here. We got GDP out on Friday, which I don't think is going to be that good. So I'd like to be long dollars, short sterling, probably long euros, short sterling, and I'd be looking to fade equities.
Any good places that you're looking to do any of those?
Not really. I think that if you start seeing sterling's holding in pretty well around about the mid 120s, a little bit higher. I'd probably be looking to get short. If I was anything like 121, I'd get well short there. I think you could see 119.5, 119 pretty quickly. On the euro, I think you could see that down to 105. So I'd be getting short now.
Well, you are, and what you do normally on a day-to-day basis is you consult businesses on how to deal with their currency risk. Can you tell us a little bit about what you do at Pardus FX?
Yeah, we helped hold people's hands and help them navigate their way through the currency markets. Trying to help them with the timing. We can't always get the markets right, but you can probably pick out good times to go in and bad times to go in. And really just give people some confidence of the markets, because a lot of people just say, oh my God, the foreign exchange markets, I don't understand them. I don't understand them. And just try and make things a little bit easier and demystify the whole process.
Well, I want to say thank you, Mr. Matthews, for holding our hand each and every week. And if you all appreciate what Richard is doing for you, make sure you give him a thumbs up, subscribe to this channel so you don't miss any of our content that we give once a week, what Richard gives to you. And I want to thank you for joining us this week. I'll catch you next week on our little, I guess we'll be watching inflation data and kind of seeing how the chips fell.
Yeah, St. Valentine's Day. You heard it here first. It's going to be a massacre like Al Capone had in Chicago way back.
Oh, my goodness. You're scaring me. All right. Thanks, Dick. Have a great day.
Have a good time. Cheers now. Bye.
Hey, traders. Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also, click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.